All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Let's take a look at some of these prices. If I bring up corn, what do we have going on there? Well, it's down a half cent in that Dees. 489.5 is the last there. Let's go to the beans. So we're down a half cent in corn-ish. We're up about 14, 15 cents in beans. Novus at 13.01. Went through that 13 level. There you go, up 14 and 3/4 cents. Wheat in Chicago, that's going to give us a 4.5 cent lower, 572 and 3/4 board. That's Dees there. 4.5 cents lower, Dees wheat in Chicago. See the hard red in Kansas City, that's down a half cent, 668 1/4. That's the Dees hard red wheat, 668 1/4, just down a half cent. Spring wheat, Minneapolis, that's up 1 1/4 cents to 730 even, right? 730 even. That's the Dees contract there. Spring wheat up about a penny and 1/4 right now. And then finally, cotton, and that's going to be lower by 195 points to 83.20, just 20 cents off the lows. All right, now that we've done that, let's get to our guest analyst. That's going to be Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. Tommy, thanks for being on. All right, you got an axe to grind. What's top of mind for you today?
I was just waiting for my turn to talk, Scotty. Let it rip.
Here we go.
We got beans up 15, and that's a wonderful thing. To have harvest and have beans up 16 is a big deal. Several clients asked me yesterday that they said, well, the USD is now under 50. Do you think it can go lower? I actually do. So with weather problems, and I was wondering, maybe you could ask Jeff, will Jeff be covering the South American weather a little bit? Is that something we'll do on the show?
He does.
Okay,
he touches it.
Very good. I got so excited when he said sugar beets in the Northern Plains, I didn't listen to the rest. But there is a weather problem in South America, and I just had an email we have several weather services we subscribe to, and we got to keep an eye on this. Now, the canary in the coal mine is the soybean meal. The soybean meal is what leads these big bull markets. Of course, in past years, we had a soybean oil-led market that has very much changed. So watch that oil meal spread, watch meal. Argentina exports a lot of meal, and that's what you're seeing. Even though we have a little bigger carryout here in America of soybeans, it doesn't take much to take a 250 carryout down to 2. You start talking 150, 100, you're talking end of the barrel type soybean carryout. So keep an eye on that. The harder discussion to have is, and I was earlier today, I was selling soybeans up 14, and I was buying corn down 2, going, why am I losing on both of these? But that's what, we have a lot of extra corn, and that just straightened out a little bit. But nonetheless, for the farmer, if you see soybeans rally, get excited, but know the fundamentals in soybeans aren't nearly the same as the fundamentals in corn. And when we skip to wheat, it trades up so many days in a row and closes on the low, it makes me just absolutely disgusting. Russia's flooding the market with wheat. They're growing wheat everywhere all over the world. And it's a problem, Scotty. Now, real quick before we go on break, we have to keep talking, reminding, and educating people on the mathematics of store or sell off the combine.
Yes.
And although you see that juicy carry right now from November all the way out to July, there's 50 cents carry. But when you do the mathematics of what it costs to carry that bean all the way out there, it gobbles it all up. But with all these crushing plants, someone's going to get rewarded or should get rewarded for storing that bean for 6, 7, and 8 months all the way back till next harvest. Back to you, my friend.
Well, I mean, you've got the 2-year yield too at over 5%. I mean, you can sell, take the cash and invest it and start to pay yourself. So are you bullish beans then? Is that what I'm hearing?
Excuse me, I'm having a hard time here with the am I bullish?
Are you allowed to say? Are you?
I'm in my mom's basement. Beans are $13. They're up 16. Am I bullish beans? I think it'd be a lot easier to get beans to go from 13 to 14 than it would be to get corn to go from 5 to 550. Does that help you?
Not really, but I get what you're saying there. I mean, the fundamentals of corn. I mean, we just had an analyst on saying that with what we've got out there in the carryout, I mean, you can make an argument that it goes 50 cents, 75 cents lower from here. I don't know about that. I mean, the lower you go, the harder it gets to go lower. That's an old adage. But it's interesting. I do like the beans because I can see a case being made for things trading. I'm gonna say solidly higher, but not ripping your face off higher. That's all, because we still have to worry about South America.
Absolutely, that risk is there. We sold a bunch of soybean meal cake yesterday. That was very interesting.
Okay. All right, stay right there. We're going to come back and we're going to talk more with Tommy Grisafi. We're going to talk about livestock when we get done paying these bills. We'll be right back. All right, welcome back to Market Day Report. This is the other side of the ledger. We got to talk about the livestock, especially if you wear a cow jacket all day. Let's take a look Let's see what live cattle have got going on for us here today. I got that board up. Let's go to the D's. It's up 82 cents. 187.37 is the price. Not too far, about 22 cents off the highs of the day. That's live cattle, up 80 cents. All right, let's go to feeders. That's Nove. That's up $1. 250.92 is last. 250 spot 92, and that's well off the highs. We're kind of in the, well, not really off the highs. It's about 25 cents off the highs. Not bad. 92 cents higher feeder cattle. There you go. That's Nove. Then finally, lean hogs. We'll get back to our guest analyst. That's taking it a little lower here, 67 points lower, or cents lower. 67 spot 62 is last there, and that is getting close, about a nickel off of the lows of the day. So trading heavy. Lean hogs, D's down 67 cents to 67.62. All right, Tommy Grisafi, he's with us today. Thanks for sticking around, Tommy. All right. Anything that you want to get off your chest when it comes to the livestock here, or you can really talk about, the floor is yours. You can have, do whatever you want.
Well, thanks, Scotty. I haven't talked to many livestock clients today. I've been extremely focused on the soybeans, and it's really fun to help people manage the risk of a bushel during harvest. I will say this, when it comes to livestock, see what all your choices are. We had a big break in feeder cattle, say we broke $15, and people say that's good enough. Says who? I mean, who gets to just say we're at all-time highs and $15 is enough? We're starting to trade where we trade down a few days, we trade up. Hogs, they don't look so good when you look at that mathematics of hogs, especially with, as you and I spoke in the first segment, as soybean meal increases. Hog guys, be careful. If you need to get those meal and corn inputs bought at an affordable price, make sure you have your upside, you get some of that upside bought, because the economics already don't look good in hogs. We get a runaway bull market in meal, and then if corn goes up 50 cents, it's going to really take away those margins. So the mathematics of growing the livestock, raising animals, we know, and we're going to remind people again, I spent a lot of time in the 10-year note pit and a lot of time in the corn pit. Interest rates are on the move. The bond market's getting smoked. It has never been more expensive to be in the business. Back to you, my friend.
That's a good point. I mean, if I bring up the bond price right now, that 10-year yield is almost a 4.82. I mean, that's getting up there. I mean, think about it. You can put money away for 5% for 10 years, which statistically you probably wouldn't want to do. But unfortunately, a lot of folks out there have gotten used to these high returns in the stock market after the pandemic. And it's kooky talk, really. It's on steroids. Normally, we would look at, say, an average return on the stock market of between, say, 7 or 8%, or maybe even 6 to 8%, depending on the year. That's around where you. So if you're getting offered 5% risk-free from the government and you get a tax write-off, that starts to compete with what's been happening over there in the stocks, especially as you get older and you want to take less risks. So there's definitely some decisions to be made out there, as well as the decisions whether to store it or sell it, and all the things that you just mentioned. So we got lots to talk about. I appreciate you coming on. That's Tommy Grisafi.
See you this afternoon.
All right, brother. Tommy Grisafi, Advanced Trading, Valparaiso, Indiana, his mom's basement. We'll bring it back here to Nashville.